Welcome to this morning's webinar. This morning's webinar will focus on the Small Business Administration Program, specifically the Payroll Protection Program. And this is a program that primarily has definitely had us focus on the small business community, but the way that the program is also designed is so that it could also benefit the nonprofit and also the faith-based communities as well. For this morning's webinar, we have an exciting panel. We're going to be joined by Tyler Rossmaessler, who is the Director of Economic Development for the Flint and Genesee Chamber of Commerce. We have with us also Janis Mueller. She is the Regional Director for the I-69 Trade Corridor for the Michigan Small Business Development Center. And we also are joined by Kalfani Stevens. He is the Director of Economic Development for the City of Flint. After the presentation, we will open it up for Q&A. And with that being said, I will turn it over to Janice for her presentation.
Thank you very much. We should be having a PowerPoint come up. I'm Janis Mueller. I'm the Regional Director for the Michigan Small Business Development Center. We are funded in part through the federal government and the state so that we can help small businesses and nonprofits focus on growth. So under normal circumstances, we're working with businesses every day, and due to the COVID crisis, we are on the front lines trying to help everyone navigate the different programs. Next slide, please. Our website is the SBDCmichigan.org. It is a wealth of information. At the top is a banner for COVID-19, which has all the updated information on each of the programs and what we're hearing day to day, every moment out of SBA, unemployment, and any other programs that we're able to hear about. We focus a lot on the CARES Act at the federal level and how it impacts small businesses and nonprofits in the region. We also offer one-on-one consulting. So there's a button if you want to talk to someone. The easiest way, because we're telecommuting, is to click on the link, register, and we'll get back with you and connect you with a counselor. We have a team of consultants across the region, which is 7 counties, and all of our services are confidential and free. And then we are updating training every single day. We're having live webinars. There was one yesterday, is planning for uses of your funding during COVID if you've gotten a PPP loan. So you want to make sure you're following the directions and have a plan to spend down your money so that it can be forgiven. Next slide, please. We're here today to talk about the Payroll Protection Plan. This is a plan, part of the CARES Act, which allows SBA lenders and approved banks and credit unions to provide loans which can be forgiven to cover payroll and some other expenses during the COVID crisis. This is a short-term program. This program closes June 30th. This provides 100% federal guarantees to loans to employers who maintain their payroll during the emergency. It is a base calculation covering 8 weeks of payroll. To determine how that calculation works, they look at your last year and determine how many people you had on payroll. And payroll, for the purposes of this program, includes not only wages, but taxes, tips, commissions, healthcare coverage, cost for vacations, sick leave, etc. It does cover everything that's tied directly to the compensation you do for your employee. However, it does not cover any bonus structure. There is a maximum on payroll for wages of $100,000. So if someone in your organization makes $150,000, they will take $50,000 off their base wage, but you could still then add in the taxes, commission, fees. They look at last year's financial data to determine your average monthly payroll. So if, for example, you had an average payroll of $1,200,000 for the year, you divide that by 12, that's $100,000 per month. Your base is $100,000 for average payroll. They would multiply that by the factor of 2.5. That is the standard formula every single bank is using. There is a 6-month deferred rate, and apparently this didn't get updated, but it's at 1%. There is no payment made on this loan for 6 months. It is a 2-year term at 1%. So the first thing you would do is you would contact your SBA lender or credit union, and you would determine your payroll cost. That's going to have to come off of financial documentation and determine that. This program is a one-time loan only. Next slide, please. The additional loan, because we're getting more than the 8 weeks payroll, can be used to cover interest on mortgage, interest on other debt, utilities, and rent. So in this little simple example, we figure our average payroll as $100,000. Your loan amount would then be $25,000 because it's 2.5 times your average monthly payroll. You have to begin using your payroll or your loan as soon as the money starts to hit your bank. So when the money hits your bank, let's say it hits the bank on the 20th of April, you then you bring back all your employees if they're on layoff and use that money to cover their payroll for the next 8 weeks up till June 20th, June 20th. Okay, it's really important. You could then use the other 25% of the loan covering interest on debt, leases, and utilities. So 75% of your loan is going to cover those 8 weeks of payroll. 25% is going to cover interest on debt, leases, and utilities. Okay. If anybody has taken out or has applied for an EIDL loan, which is a different program, which we're not focused on here, you can use them both. However, you cannot do duplicative efforts. So if you get an EIDL loan, use it after the 8 weeks of payroll protection plan use. Very important. They will not allow you to, quote, double dip on the program. Next slide. With the payroll protection, the goal is to get people back to work and not on unemployment. So if someone is currently unemployed, you would then bring them back and start to pay them. Even if you're not open or providing services, you're paying them at home their old wages. And at the end of those 8 weeks, you can submit to your bank for the payroll information. They will then forgive the loan of 75% if it's covering payroll during those 8 weeks. Very important because that's basically allowing you to keep them, quote, working. And when we get released from our homes, you're able to keep going and make sure you have the same staff. The rest of the money, the 25%, can be used, as we said, on utility payments, rent payments, interest on mortgages, and interest on other debt. It is really important that you work with your lender on exact documentation that will be required to prove and request forgiveness of loans. The bank needs to verify to the SBA based on payroll records, which they will compare against unemployment records, that you spent this money in accordance to the rules. They are currently writing the regulations and the guidance on the forgiveness. This has been a very rapidly moving program. It's very fluid. The SBA has had to rewrite the entire loan packages with the banks. The banks have had to work on changing regulation and underwriting. And so the guidance on the forgiveness is coming out to the banks, but there will be required documentation. If you are not following the plan according to the government regulations, you can be held accountable for recourse with penalties of up to 5 years in prison and $250,000 per incident. So it's very important that you recognize the role of this program is to get your people paid during this shutdown, whether they are working in your physical location or telecommuting, and it helps you buffer that, or if they are sitting at home and you are paying them to be on your payroll. You will have to prove that you chose to pay them and have them covered with documentation. Okay, it's really important. They have expanded this Protection Act to include nonprofits in the 501c and 501c9 programs. Okay, really important. This is unusual for any federal program, so it's a really great program to help everybody. They recognize the community needs for the nonprofits and the faith-based institutions. There is no determination you have to be X or Y. It's just the 501c and the 5C3 and the 501c9, which is a war vet organization. What is not covered is the 501c4, which is a social welfare program, and a 501c6 Chamber of Commerce type business. But it does extend to tribal concerns as covered under Section 31B2C of the SBA Act. So if you're any of those three, 501c3, 501c19, and tribal business concern, you are eligible for this program. 75% of the forgiveness, as we've talked about, is for minimum attribution to payroll. This means that, let's say you want to put 100% of it towards payroll, you can do that. However, it has to be used within that 8-week payroll. There is a minimum forgiveness of 75% tied to payroll. And the reason this is important, if you have an employee currently on layoff that is making more money on unemployment, you're going to bring them back. They're going to have to stop getting unemployment because you have to prove they are working for you, not on unemployment. So you may be able to give them a COVID stipend to cover the difference between their unemployment and the wages that they're currently getting. Kind of important. It's a strategy that you're using to make sure you still have the people working for you when they release us from our homes. Okay. Again, very, very important that required documentation use of funds is followed. And this program is a direct lender program. This, you contact the bank and you fill out the paperwork. It is based on a first come, first served basis. And there is a total amount of, I want to say, $349 billion in this program. And when that money is out, that money is out. So I know that you're seeing on the news that people are petitioning the Congress for additional funding. So it's really important that, you know, I think they're going to come through with it because this program has been really well received and is helpful for small businesses. Okay. There is no guarantee required on this loan. Okay. It's very important that you recognize that this is a quick application based on financial records from last year, and that it offers a very rapid influx of cash into your business to keep people on the payroll and cover some of those additional costs. Any questions? I went fast, but I want to make sure that you guys, if you have any questions, you know, we are here to help walk you through the process. Again, this is our website, the SBDCmichigan.org. We offer counseling training, and we're really pushing a lot of the COVID-19 information out from all programs. And we're here to help as you're navigating the process. Hey.
Thank you, Dennis, for that presentation, and I will pass it on to Tyler.
And I will unmute. Well, yeah, thanks, Janice, for having given that presentation. I think it's really important what you said for nonprofits and faith-based organizations that are not used to applying for these types of programs. It doesn't usually come for them, and this time it is available. So you offering your assistance is very valuable, and we'll just take any questions if they come, but if not, maybe California wants to jump in.
I do have a question. Somebody is asking me to discuss the difference between the EIDL application and PPP process. The EIDL loan is an emergency injury or economic injury loan that's available directly through SBA. It is a program that was originally developed for natural disaster affecting a state or two at a time, and it allows an application for up to 6 months of working capital to a maximum of $2 million. It is directly through SBA.gov that program is handled. The PPP is for the 8 weeks employment reimbursement and forgiveness loan, and that is directly with a bank. Very important to know the difference. If you have applied for an EIDL, that is for the next 6 months of working capital after you use your PPP. If that is the answer that you guys are looking for. Kafani, is that what you wanted, or do you want more info? Perfect.
Kafani, we also want to provide you an opportunity as well.
Oh, great. Thank you all. Thanks to the chamber. Thanks to SBDC for bringing this together. The City of Flint, of course, is doing everything that we can to be as responsive to this. You know, a lot of our efforts have been focused to date on the municipality, the populace, the people, you know. So we were the first to have a curfew and to really get out there and encourage people to be at home. We have also been in contact with our different federal agencies, asking to reappropriate some funds that we have and allow us to do different things than what we have been doing. So we do currently have our Economic Development Corporation. We have funding there. That funding is still under all of the regular guidelines of the Economic Development Administration. So while it is there and available for businesses that are looking to grow and expand, we haven't gotten yet the go-ahead to change the way that we use that money. We've requested it. We're actively working with them, and as soon as we get the go-ahead to change it, we certainly will.
Thank you, Kafani. And from here, we'll turn it back over to Stephen Elkins to see if we had any questions come in from our online viewers. Stephen, I think you're mic. Your mic.
I think after being here this long, okay, here we go. And I think we're getting a little feedback from Janice. I don't know about you guys. Question is, how would an organization that administers its services primarily through 1099 contractor relationship as opposed to a traditional payroll?
I cannot understand the question. You're garbled.
Let me try reading it again. How would an organization that administers its services primarily through 1099 contractor relationship as opposed to a traditional payroll access? I'm sorry. Hence, 2 to 3 contractors at $6,600 per month. How would they benefit from and utilize the PPP or the EFPL local?
Okay. Under a contractor relationship, a 1099, you are not eligible to apply for payroll funding. 1099 employees, independent contractors are not part of the payroll calculation. Payroll is someone you're paying wages and taxes on. However, under EIDL, you can apply under EIDL as a business because your contractors may be considered working capital fixed costs. And your independent contractors as sole proprietors or setting up their business may also apply for an EIDL loan for any of their working capital. However, it's going to be dependent on how they have proved that they're making money being an independent contractor. So there's going to be paperwork regulations under the SBA EIDL. However, all of you are able to apply for unemployment if PPP doesn't work for you. You as the owner of a business can now apply, and all independent contractors, 1099 sole props can apply as well.
Thanks, Janice.
Yep.
Another question. What about PUA? I'm not 100% sure what that is. Maybe the comment can clarify further.
That's the payroll unemployment assistance. That is unemployment. You might hear it called PUA or FPUA, federal unemployment assistance. Again, that has expanded to include owners of businesses, which is never covered, sole proprietors, independent contractors, 1099. As long as you can prove you've had wages, you can apply for unemployment. The unemployment at each state, so Michigan, you apply through michigan.gov/UIA, and you would sign in as an employer or an employee, because you're applying for the benefit. So under Michigan, let's say you would get a base rate of unemployment of $300 a week for the term that you're unemployed. Normally that's 26 weeks at $300 that you would be eligible for. Under PUA and the federal PUA, during the COVID crisis, they have expanded unemployment benefits by an additional $600. That is handled at the state level. When you sign up for unemployment, you would mark that you're temporarily unemployed due to the COVID crisis and mark that you expect to be back to work in 120 days. This allows you to capture your 300 base plus an additional $600 for up to 39 weeks of unemployment. This has been expanded because they recognize the hardship that has been placed on people through no fault of their own. And they recognize that if people can't afford to pay their rent, they're going to have a bigger crisis in 4 months down the line when everybody is getting foreclosed on and things like that. So they have really opened it up and expanded the financial piece. You do have to apply for it. Like every other program right now, these programs were built for 200,000 to 300,000 people applying at a time, not 3 million. So the state of Michigan had to rebuild their unemployment program from the back end all the way forward to add in the component for the federal PUA. And so they have done tremendous job getting there. It's very frustrating. People who are trying to call can't get through. But as I say, they built this originally on a back country road, single lane, and now they're trying to manage 25 lanes of traffic, three decks deep. So be patient. The program is vastly improved even since Monday of this week, and it's a lot easier, and it is now open up for all sole proprietors, business owners, 1099 employees to apply.
I'm going to try something new. I'm going to show the question some new functionality. Our church is available for SBA loans.
Depends on what you mean by SBA loans. Right now, they have expanded it to include nonprofits for the EIDL loan, the Emergency Economic Injury Disaster loan. So yes, you can apply for that. Yes, you can apply for the PPP. I believe they have expanded the 7A 504 programs as well. And there is some debt forgiveness within each of those, but I can't guarantee that they have expanded them to nonprofits. So I'd have to research that. If you need that information, register for services. In the box where you say specific info you need, I need to talk to Janice, and that'll come to me and I can research that information for you.
Those are the questions that I have so far.
The only thing to add to that is just that what we've been talking about today in response to the COVID crisis, the PPP and the EIDL, those loan programs are available to churches, nonprofits, faith-based nonprofits, etc.
Any other things Adrian or Janice would like to add?
I'm good on my end. Stephen.
The only other thing I'd like to add is, you know, if you've been following the news and different things, you've heard a lot about, you know, crises and access to capital. Any Flint company that is, you know, experiencing that, especially the smaller companies, especially these nonprofits, we encourage you to contact us so that we can connect you with the resources, right? You're busy running your business. You didn't know about the EIDL. You didn't know about the PPP. You may have missed the MEDC program that rolled out a couple of weeks ago. Contact us, any one of us on this call, myself, Tyler, and it's our job to be up to date on those things and connect you with those resources. That's what we're here for. Use us.
And to piggyback on that, I truly believe that there's more coming. It's not the time to get dismayed or discouraged. Now is the time to dig in and fight, just like we've always fought in our community. We are very resilient. We have to work together. It's very important that the faith-based and nonprofit community is strong and thriving because we need you. This is a time that we can see the critical need, which is why they've expanded this program. We know that you are facing giant hurdles with the amount of people looking for services and assistance, and the government is recognizing that. So I don't think these programs are going to be the only ones that funnel through. And we're also looking for other national and federal and state programs to try and see what we can do, as well as private and other nonprofits focusing money on our community.
Another question. I'm going to show it. Does the larger bank your organization banks with cause delay on the time for a loan to go through?
No, I don't believe that it does. They are taking on a first come, first served basis. However, if you don't have a banking relationship with a bank that's doing SBA funding, you have to find a different bank. Banks are able to determine if they are working with new clients or only existing depositors or debtors. And so that becomes a challenge, but the 5 of us on this call know of other banks in the area that are stepping up and taking new clients and new nonprofits. It is first come, first serve. If the money runs out, we expect it to be refunded, but that's the challenge that this program has, is there's so many people that need it and can access it. The money's dwindling quickly.
Another one. I'm reading a fictional scenario, but I'm going to put it on the screen for all of you. Good questions, Bernard.
Yes. Okay, so your monthly forecast, can you put the question back up while I talk so I can read it? This is important to understand. The PPP can cover your payroll expenses for those 8 weeks from the time the money hits your bank account. That is all the items we talked about that incur payroll: wages, taxes, tips, commissions, healthcare benefits, etc. That is how you use PPP. In addition, you can put interest-only payments towards your mortgage, utilities, and interest on other debt. Okay, so it's not a full mortgage. So with your question, your EIDL would be used to cover your mortgage expense minus the interest, because you'd use that on PPP. Your EIDL could be used either for utilities if they're not covered totally by PPP. Your insurance is considered a fixed cost, so that would be under your EIDL. Your admin would be fixed cost under your EIDL. 7,500 pastor, I don't know what that means. If that is payroll or a draw for your pastor, that would be PPP for the first 8 weeks, EIDL for the rest of the time, use of your EIDL. 5,000 outreach is considered marketing, which would be considered a fixed cost and covered under EIDL. Maintenance is a fixed cost, would be also covered under EIDL. Reserves not going to be covered on EIDL because that's not working capital. Supplies depending on what they're used for, could be used with idle. They probably ask for more information. So the most important thing is if you're utilizing both funds, recognize PPP, payroll, 8 weeks from the minute that cash hits your account, interest only on mortgage, lease payments for your rent only, and interest on other debt. All the rest is working capital, and that's the idle. So the benefit is you get 8 weeks with PPP. Idle is for 6 months going forward.
Thank you.
Yep.
Next one. Please restate which programs churches can utilize and how they can be utilized.
Okay, churches can use the idle loan, which is an SBA direct working capital loan for fixed cost that you're going to incur over the next 6 months. PPP can also be used, which is a direct to the bank loan that is used for payroll for up to 8 weeks, plus the other items of interest on mortgage, interest on debt, utilities, and lease. That starts the 8 weeks the money hits the bank and has to be proven to be forgiven. Both those programs are eligible for churches and faith-based and nonprofits.
And this will be a reminder, but worth stating, where should the church begin the process?
I would start with idle, which is sba.gov, and click on the COVID-19. There is a path to get to the idle loans, but I'll tell you, I looked at it this morning and there's a big statement saying they're not accepting loans today because they have maxed out their appropriations. So that screams to me as a statement that Congress needs to go back to work and file for more appropriations. So that came up at 8 o'clock this morning. So I'm not sure what will happen, but I would check that site every day to see when they're going to reopen it. We expect them to reopen it. This idle loan application process is open through December 31st of 2020. So if you don't know what you need yet for working capital to get moving going forward, you might want to wait. But right now, you've just got to keep waiting until they get appropriations and can reopen it. PPP, obviously, is limited to the $350 billion that they've allocated. First come, first served basis, contact your bank. Are they participating? If so, get in the pipeline, start filling out the documentation.
If anyone wants to comment on this, there is a comment in the chat about those dollars. How will this affect the conversation? Do we expect more dollars? Have you heard anything in that regard?
I think this might be a good question for Adrian. He can talk about our work that we're doing with our congressional delegation. I think just to reiterate, that's an important point, that if the $349 billion runs out, the program does not go away. Just Congress has to put more money in the bank. And so I believe they can and want to do that. They have signaled all along that they're never, if it runs out of money, they're going to put more money in. So I think the best advice is what Janice said: is to go talk to your bank, get in the process, get organized, get going. But Adrian can talk about kind of
Yeah, just to add on to what Tyler's saying, in the meantime, while small businesses are talking with their banks, we're working with our congressional delegation, both in the House and both in the Senate, to advocate on small businesses' behalf and the need for more funding to go within the program. So much so that we actually have a call coming up on Monday with all three to talk about a number of things, but specifically we'll talk about this program and to get an update from their end, if nothing happens before Monday, about where things stand specifically with this program, and for them to be able to hear from our small business, nonprofit, and also faith-based community about how they're being impacted by this program. It's something that we're actively and aggressively doing because currently, as it stands, Congress isn't slated to potentially all come back together until maybe at the earliest in May. Potentially that could maybe change with some rules and regulations around unanimous consent and what that would mean for further funding to go through. But again, it's something that we're actively doing, and we strongly encourage everyone to come back on for the Monday call with our congressional delegation to where they can receive an update about this program.
And then the other thing that I would just say is not to forget that while these programs are new, extraordinary, and I mean extraordinary in the absolute sense of the term, that, you know, a 1% loan with 6 months deferred payments, a loan that is capped at 3.75% for profits and 2.75% for nonprofits, right? Those are extraordinary terms that you don't see often. However, again, speak with Janice, speak with myself, speak with Tyler. There are existing programs that are out there that help businesses that are loan-based, that are really good, just not extraordinary. So if for whatever reason you need this capital and you can't get into one of these programs fast enough, there are other alternatives for you to seek out. And that's why I'm saying, reach out to us. We have programs to help you.
And Adrian, the webinar is on Monday at 10 a.m. just for everyone that's watching. It'll be
Monday at 10 a.m. Yes, sir.
Yep, it'll be here, Facebook Live, and YouTube Live for those who don't have a Facebook. One more comment here, Janet.
Okay, what I would do, the question is regarding their financial documentation and what they need to get started. If you haven't filed your 2019, they're going to need that because that's how they're basing the information going forward. They will probably look at your 2018 and make some broad assumptions from there. Financial documentation is always critical, and the more aligned your documents are, the better it's going to be. They are basing this off of tax documentation as well as documentation that you've submitted regarding payroll and accountancy. And I'm sorry, I'm getting other questions as well. And so it's really important that you're working with your CPA and your lender to determine exactly what they need to see based on your individual needs. Not everybody has filed their 2019 documents. Some may have extensions, so you're going to have to work through that with your lender. The lender will make those determinations on your PPP program. The SBA will make those determinations on your EIDL program.
And then another question that came in, how accommodating will the lending criteria of the MEDC be compared to the standards set by these programs?
I can answer that.
Thank you.
The MEDC program was limited to, well, they only had a limited number of dollars, first of all, and was only limited to companies with 50 or less employees. It also didn't apply to small business, nonprofits or faith-based organizations. So the SBA program, the federal program, is more robust. I like Cal County's word, extraordinary. It's going to be different. It's going to follow the federal guidelines. Lots more in the details, but beyond that, you don't have to be negatively affected by a government or a governor's executive order. You can have more than 50 employees, and it is a loan. Like anything you would do, it's going to have financial review. What Janice do improve your employees.
And there will be the payback piece for things that, let's say you use it for something that you're not allowed to do. Obviously you want to make sure that you're maximizing the forgiveness on everything. And we're not sure what that's going to look like. Again, they're doing SBA standards. It is very important with regard to however you get your money, whether it's through EIDL, whether it's through PPP, that you have an actual spending plan based on the calendar requirements, as well as your ability to pay back the loan. So the EIDL is a 30-year loan at 2.75%. So let's say you only get $15,000 for that. I'm just making a number up. That's about $50 a month for the next 30 years. that probably won't kill your cash flow. But if you get a bigger loan and that becomes a $600 or $1,000 loan payment per month, you have to determine how that's going to impact your financial statements, and can you have the ability to pay it back. On our website, we do training. There's on-demand training. So when you go to our website, sbdcmichigan.org, scroll down, there's a training button. Look at that. Look at the on-demand training. We did an hour-and-a-half webinar yesterday on perfecting a plan for spend down so you can stay within the rules, with spreadsheets and templates to help you. It's really important that you're managing the money and planning your spend down properly so that you can turn in the documentation required to PPP and be forgiven and stay within the rules on the SBA loan.
Jan, for you.
You can register for counseling services with sbdcmichigan.org and type it. They scroll down about a couple inches and there'll be a button there that says register for consulting. You'll fill out a registration. When you get a box, it says type of services needed. Just put in their request to speak directly to Janice, and that'll allow our triage person to get that to me. And be patient with me, because as I've been on this call, I've gotten 583 emails. So I will get back to you. It may not be the same day that you register. We are seeing 1,000 people a day right now and doing our best to maintain the flow without breaking under the pressure.
We're very honored to have your time, though, Janice. Thanks for saying that.
I'm just excited to be here. Again, I cannot express how important nonprofits and faith-based are going to be going forward. You are supporting our community's spiritual needs. You're supporting our social needs and our ability to connect. It's really critical that we're all working together. You know, let's say they release us back to work and everything goes back to normal May 1st. It's a whole new economy out there. We need to rely on each other. This is vital, and it's going to be with us for a while so that we learn how to navigate a new environment and safety protocols so that we don't have to go through this every year.
Everyone needs
Hey. You're awesome.
Everyone needs
My cape.
Yep. Anything from Janice, Adrian, Kalfani, Tyler before we close out?
I think Janice said it best. Thanks, everyone, for joining. I think, Stephen, you should remind everyone that if they found this helpful, it will be recorded and able to rewatch.
Yes, sir. On our website, flintgenesee.org/toolkit, we're recording all these conversations. They'll be posted there. It was on Facebook, so you can refer back to it. Share this information with any friends, whatever, that have questions. And then, as always, feel free to reach out to any of us at the chamber directly, and I assume the same as for Kalfani, and we know how to reach Janice. Thanks, Tyler.
Thank you, everyone. Have a great day. Stay safe.
Kalfani, good? Everyone good?
So no, we're good. Just want to thank everyone for attending today, and just reiterate that we are doing the best that we can at the City of Flint to be proactive, and thanks to the chamber again for helping us get this information out.
Thanks, everyone. Have a great day.
Thank you.